In any investment, there are always uncertainties, always ups and downs. Today, the central banks have given the markets the impression that there are no more downs and that the markets will perpetually rise. Thanks to the central banks that love us very much, we are at a permanently high plateau. At least I remember hearing that one before. You came here for the truth, so let me unveil that for you. I've got an absolutely jam-packed episode. We are going to look at what's happening with the economy. I'm going to show you what's happening with the jobs, talk about the smart money index. I'm going to show you what's going on in different indicators. I've got various things I need to cover. Let's move into it right away. The foreign share of ownership in the treasury market has declined to its lowest level since the turn of the century. Foreign share of marketable treasury debt outstanding as a percentage, and you could see that this has been declining. I had a lot of people on the channel over the last little while who have told me I don't know what I'm talking about. There will always be more and more buyers. China's buying everything. This is not the case. Well, I've told you numerous occasions that the Federal Reserve will be the buyer of last resort. They already have been and will increase their percentage. That's exactly what is going on. It doesn't take a genius to figure that out. I think it is pretty clear. And you can see what's been happening over these past few years. The share of foreign ownership has been declining. Federal Reserve has been doing the buying. So who is going to buy all of the debt that's still coming down the pike? It looks like the responsibility will increasingly fall on the Federal Reserve. In fact, the Fed is already backstopping the market and making this borrowing binge possible. In the third quarter, the Fed bought $240 billion in U.S. Treasuries. That brought its total Treasury holdings to $4.4 trillion. The central bank now holds a record of 16.5% of the U.S. debt load. They will increase this. It will go on. And as you do this, as you monetize the debt, you devalue the currency. As a result of that, you could have asset prices increasing. I am consistently hated on by so many people, even those who watch my videos regularly, and they're sick and tired of me not just saying, you gotta buy this stock, you gotta buy that stock. I want financial advice because I can't read between the lines on it. Look, you've got to realize what's happening here. Whatever you want to do with your money, you've got to do that on your own. This isn't a place and a platform to find financial advice, and I don't want to know why. After I've been doing these videos, giving you the information that you need to make those informed decisions, there are always people who are pushing me to give financial advice, and quite frankly, I don't want to do it. I'm not going to do it. And I know that my real good subscribers who have been with me for so long don't want that. They want to make up their mind for themselves. And I just want to thank you for that. Let's move on. No more ranting. Top ECB official privately called investors and banks after key policy decisions. They're making a big deal about this as if these two aren't connected at the hip. Look, you've got Goldman Sachs. You've got all of these different institutions. It doesn't matter whether we're looking in Europe, whether we're looking in the US. Big institutions, the central bank, the government, they are all connected behind the scenes. You are seeing them as separate entities and they're supposed to be having your best interests in mind. Oh my goodness, it's 2020. We're almost 2021 and people still haven't woken up to the fact that everything you see in front of you is just a show. You can pay a monthly fee to get your Apple TV Plus, to get your Netflix, and you can watch the program. But this is the real deal, and I use the word programming intentionally. This is what's going on, and you don't even realize it because they do such a good job at making it all seem like it matters. Tesla stock jumps after announcement it will join the S&P 500 in one go. So they already boosted up in this period of time so quickly, and one of those reasons was because, all right, it's going to be involved in the S&P 500 now. And that made the stock go crazy, and now here's a second round of that. It doesn't even matter if it's one go or not in the grand scheme of things. If you look at it on a scale of even a month or 2 or 6 or what have you, it's just another reason for the stock to go higher. The fear and greed index, I thought this was hilarious because it declined. It's at 85 now. It is at 85, not 95, not 100, but it's at 85. And sure, it's still in that extreme greed range, but come on. I mean, this is ridiculous. There's nobody out there that's shorting the market today. Nobody. I'll show you some indicators today that will prove that this is the most overvalued the markets have ever been in, that there is so much greed that this is at 100, and if it could go above 100, it would be there. There's a bit of complexity to this chart here. I just wanted to note the fact that we are in a stage of euphoria. On the right-hand side, it just says S&P 500 12-month forward return percentage. We're looking at levels we haven't seen since the dot-com. And remember, that was such a limited event where the tech stocks were all going crazy at that time, and you had certain names that were off the charts pulling that average up like crazy. Today, though, yes, you still do have those handful, the FANG stocks and so on, but it's definitely, in my opinion, more frightening because much more is involved. You have the retail participation that's going on. You have the institutional investors that are heavily invested in these companies that have gone into these astronomical ranges, and it's never a good thing when that happens. Total put and call volume as a percentage of the NYSE volume. Look at the blue at the top, that's the calls, and look at what has happened in 2020, escalating to record highs. The chart goes back from basically financial crisis till today, and it just shows you that more and more people are buying in. Nobody's shorting, that's not happening. It's a little bit ridiculous when we see this at such a high level. At the top here, you are seeing the S&P 500. At the bottom, it's showing us the percent of members above the 200-day moving average, and that is right here at about 93%. It's hard to tell on the chart here, but we are basically at a record, at least going back to almost the financial crisis. This is just out of this world on so many different levels, from so many different indicators. That does not mean, I'll say it right now, that does not mean that there is going to be a crash tomorrow, that the stocks are just going to plummet by 80% tomorrow. No. But it shows you when we hit these levels, just as we did towards the beginning of the year when it was ignoring all of the reality and all the information, just as what we experienced throughout 2018 two times, and in previous years as well, 2015 into 2016, there were some major events that essentially we got to these levels that were overvalued, and there were corrections. Sometimes those corrections are 20%, 30%, 10%, 5%. You don't know what occurs. It all depends on how it unfolds. But this is just the information that you should know, not what stock to buy and just buy. That's it. Just buy, Jim Cramer style. You have to know what's actually going on underlying in all these markets so that you know when the right time is to get in, when the right time to sell, or maybe to stay out altogether from the paper markets, and you want to start your own business. You want to do something with real estate. You want to get into precious metals. Well, you need to know the underlying aspects of the markets, or else you're going in blind, or worse, you're going to follow somebody that you found on some website somewhere. My goodness. This comes from Sentiment Trader. Options Speculation Index is basically right now, it's at a record high. And I've shown you this not that long ago, but look at that red line. That red line would indicate where we are, essentially saying, this is in overvalued territory. And when you see it's just not even close. It is not even close at this point, and that's what we have to deal with constantly. Everything breaking records, the actual markets themselves breaking records every single day, and then the amount of speculation in the same range. Left-hand side, S&P 500 PE ratio. Yes, it's at a record high, but hey, who's paying attention? Right-hand side, that's the PE ratio compared with the M2 money supply growth year-over-year change. These have both escalated, and I think there might be a correlation there. And here is the Smart Money Flow Index. I've covered this numerous times. I have completely documented what this all is not that long ago, maybe a week or so ago. And I just wanted to show you, to give you an update. I said I would give you an update on it because there had been money moving into the markets at a record level. And I thought to myself, well, let's look at what the smart money is doing. And it seems to be actually at the same level it was before. It hasn't really increased much. We're certainly not at the, at the bottom of this direction it was heading, but we are still at a low level compared to the direction that the actual market is traveling. And you could see since March, the market itself has been going up and up and up. Yet the smart money doesn't seem to be moving in that direction. It looks like it has been selling off to some degree. That does not mean they are selling all their stocks. Remember, that does not mean they're just saying, okay, we're selling everything, we're getting out of here. No, but this is just some information that I believe is really important. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you're supporting me. Thank you for being one of the 10%. If you want to learn how to sell stuff online, I am criticized every single day. I get comments constantly telling me off. I don't help anybody. I don't do anything for anybody. I am not a help. They are unsubscribing from the channel. That's fantastic for all of those who unsubscribe. I want to give you kudos for letting me know about that. That's strange. This right here is a free e-course, completely free. Okay, you go out there and you could search for yourself. All of the good ones are over $1,000 for a course. Now, maybe theirs is more comprehensive, but certainly this right here will give you more than enough information you need to know, and it is available for free. The AmazonGPS.com. All right. If you want to know about the financial system from top to bottom, A to Z, you can get the information you need to know in these two books. So definitely check them out at the link. And if you are interested in the audiobook instead, you can get that at themoneygps.com. Hang on a second. Have you seen this video? If not, you definitely want to watch it. So much information that connects in with the one you just saw. Click it. I'll see you there.